The Reserve Bank just doesn't seem to be getting inflation under control. They've raised interest rates by 4%, and by the time you've watched this video, they've made their decision again for July. But the impact of the rate rises hasn't been what the Reserve Bank's been hoping for. So in this week's Property Insider video, Dr. Andrew Wilson and I explained to you what has worked, what hasn't worked, what's happening in our property markets and the economy, and what's likely to be ahead. So if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. The RBA has raised cash rates by 4% over the year. And by the time you watch this video, the Reserve Bank's going to have made this decision for the month of July. Interestingly, the impact of these rate rises hasn't really been what the Reserve Bank had hoped for. Sure, over the last year, consumer confidence has fallen, as has business confidence, and residential loans and building approvals have fallen. But on the other hand, the unemployment rate has actually dropped, and that's a good thing, to near 50-year lows. Wages are slowly rising, and we're still spending up big, according to retail figures. At the same time, rents are skyrocketing, adding to inflationary pressures, and of course, house prices are rising across the nation. And while we've passed the peak of the inflation this cycle, the level of inflation still remains stubbornly high, creating a dilemma for the Reserve Bank, who are walking a tightrope trying to quell inflation without sending us into recession. So to better understand how all these bits play out, I'm looking forward to my weekly chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. I think it's very interesting you mentioned that sort of dichotomy between sentiment reports and the real economy. And I think that to some degree, those that are interviewed for those surveys on sentiment are having a bit of a lend of the questioner, because every real measure of the economy is certainly positive, and yet we still say, oh, doom and gloom, which, as I said, I think that this shows the problem with these qualitative type of research methods, and that people say what they think they should say rather than the hard evidence that is clearly out there that this is a very, very strong economy, not just for consumers, but also for business. And as you said, just no sign of any progress on the plan from the Reserve Bank. We'll have a look at the latest inflation data just to sort of justify that. And I don't know where the Reserve Bank goes here, because it has no justification in terms of the latest data to suggest that there's any sign that their job's being done.
Well, while consumer sentiment surveys are a little bit questionable, as you say, there's no doubt people are worried. Their mortgages are going up, their pay packets aren't going up as much, their rent and cost of living is. But they came into this downturn with more cash stashed than ever before, very high savings rates, and we've been slowly spending those. But you just have to go to any of the big shopping centres and you can see that people are out there, aren't they?
Well, they are, Michael, and we had the latest retail sales data out for May, which was released last week. As we sort of suggested may happen, following a couple of weaker months, and particularly April was a weaker month, we saw quite a strong bounce back in retail sales over May, up by 0.7% over the month. That's the strongest monthly rise since January, and retail sales have actually increased by 4.2% since May last year. So the Reserve Bank has been telling us month by month that consumption is falling, that particularly consumer activity is waning, and that's a result of, in their opinion, higher interest rates. The data's not supporting that, Michael. Clearly, we're still spending, as you suggested. There's just no sign that higher interest rates are quelling that thirst for spending. The ABS was interesting, and we've discussed this here quite frequently, the issues to do with seasonal adjustment models that have come out of COVID, because, the weaker months became stronger and the stronger months became weaker. And it will take some time for that modelling to reassert itself post-COVID. And I think that's really one of the reasons we've seen this up and down performance from data sets that to some degree are illogical. And the ABS, I think, are sort of struggling away to explain it. And the latest excuse from the ABS for the strong May result was unusual May sales events. Now, I don't recall any particular significant May sales event, but nonetheless, that's what they're saying is part of the reason for the bounce back in retail sales. So to me, it does seem a little ingenuous, considering we're seeing the same sort of unusual results in other data sets. But as I said, I think the RBA are sort of back to square one.
Of course, to understand this, what we're saying is that if retail sales are strong, that's an inflationary pressure, and that's what the RBA is concerned about. So while it's good for Australian small businesses, it's great that the wheels of industry are turning around. It does have an inflationary implication, Andrew.
Yeah, absolutely. And that's the point is wages are rising at the fastest rate in over 10 years. We still have a chronic shortage of labour, which is assisting us in pushing up, of course, wages because employers have to bid for that shortfall of labour that is out there. There are plenty of job opportunities around. Of course, we have surging migration as well. So although that should offset the shortage of labour, it's actually adding to consumption.
Well, they're all forming new households and they're spending, aren't they? As we're speaking now, the Reserve Bank is deliberating its decision on interest rates. But I guess they would have looked at the May monthly figures. How much store are they going to put in those?
Well, they have to put everything in the store, because they say that we're going to rely on the data as it's come through. We've had a couple of strange months that have been a little counterintuitive. As I mentioned, perhaps it's the seasonal adjustment models that are yet to pick up the post-COVID normality, if I could call that. But all the data that's important, the labour market data, retail sales data, and the inflationary data that came out, and we'll talk about that shortly, doesn't support certainly a sense that the job is starting to be done. And I think that they have no choice but to raise rates again. But that doesn't mean they will. It just means that the logic that they're using to support their arguments for monetary policy is very, very thin on the data. And really, at the end of the day, they have to rely on the data and certainly to provide confidence out there in their performance. But, Michael, the big picture is we've had interest rate increases every month bar one, and of course, the holiday break over January since May last year, and nothing's happened. We have no sign at all that the job is being done. We'll look at inflation and discuss that shortly, but we're not alone here. The rest of the world is still struggling to make any impact on inflation realistically. And we'll look at the reason why that is. And yet, I think the appetite for raising rates is starting to wane. And maybe that's political. Maybe that's a different stance reserve banks are taking now, central banks are taking now, in terms of the fear of creating an economic downturn. But we are so far away from an economic downturn, seriously, with this spectacularly low continuing unemployment rate. And we're not alone there globally. It's just a fear that's not justified by the data.
Well, we're talking about a recession with economic downturn, but with all the spending occurring with 500,000 people coming into Australia, the GDP in general is still growing. Sure, there may be that per capita recession where it's not growing as fast as the population is. But you mentioned a couple of times the inflationary figures. What were your thoughts on the May inflationary figures?
As you know, Michael, we've moved to this monthly model now after some embarrassment for the Reserve Bank and the ABS, considering that they've only had this quarterly inflation model now for a longer term, and they're switched now to monthly model. I think we've got some question marks about this monthly model, which of course will become the focus of analysts and policymakers. And this was very interesting, the May inflation numbers. And we've really got to question this data, Michael. Again, it's bringing into focus the issues around seasonal adjustment. But headline inflation actually collapsed from 6.8% to 5.6% over the month of May compared to April. That's annual inflation growth down to just 5.6%. I say that advisedly, 5.6% as just. But let's remember the previous month, Michael, April, annual inflation increased from 6.3 to 6.8%. This is all over the shop, up, down, and it's not just incremental changes, it's significant changes. But when we take the volatility out of the measure and look at underlying inflation eased from 6.5 to 6.4. So it eased slightly. But let's remember the target is 2 to 3%, Michael, and we're still at well over 6%, and our target's 2 to 3%. So we're so far short of that still, you can't declare in any sense that inflation is certainly starting to ease, particularly given all these interest rate increases that we've had. And when we look at the contributors over May, it was again housing. We've mentioned higher rents as being a significant factor there, or rising rents. Furniture as well was a significant contributor. But this is the key, Michael. Its contribution of fuel actually fell 8%. And this, of course, is what's driving globally the decline in headline inflation. And that's the sharp decline in the price of oil over the past year. Of course, oil peaked at $124 a barrel, and now it's down under $70 a barrel. So it's halved over the past year. This is what's dragged down inflation.
A lot of people would be thinking, Andrew, oh, it's just the petrol pump, but it's much more than that. Everything has to be transported from one country to another, within the country, to warehouses, our food, everything. So fuel has little tentacles that go into everything, doesn't it?
Yes, it does. But clearly the decline in headline inflation is a product of the significant fall in oil prices and fuel costs. Just have to look at the pump. And the ups and downs are about, in some sense, the action that governments have taken to offset that in the shorter term. So when we move from month to month, and when those actions expire, of course, we get a jump in fuel costs, and then we move back to normality, which we've done. And that 8% fall in the contribution of fuel to headline inflation certainly has been the big contributor. Saw basically a collapse in that over the period. So the only progress we've made on inflation probably would have happened without interest rate increases, because it's just been about the oil supply lines normalizing post-COVID. And the offset to everything is that with higher interest rates, we're seeing services inflation is continuing to rise, and is really what's driving inflation now, not just in Australia, but overseas. And of course, those increased in services costs reflect the response of employers to wage demands. And of course, those wage demands are being driven by higher interest rates. So it's a dog chasing its tail to some degree, but no sign of relief here. If central banks give up on this now, we're just going to have to live with inflation for longer. But the point is, and perhaps that's what higher inflation for longer, and perhaps that's going to be accepted, but that can have very negative longer term impacts on the economy, of which central banks are fully aware of, and they are explaining that that's why they are raising interest rates, because of the spectre of long-term high inflation and the damage it does cause. But at the end of the day, there's no sign at all and no justification on the latest data, with a booming economy, unemployment rates falling to near record low levels, jobs growing, unemployment numbers falling, participation rates still high, and retail sales at their strongest in terms of monthly growth since January, and still nearly 5% higher than where they were a year ago when we started raising interest rates.
Well, the other thing that's risen over the last year, or actually the last 6 months, has been national house prices. Now, at the end of last month, My Housing Market brought out the end of June house price index, and that's now been confirmed by data houses as well, that we've had month after month of rising house and apartment prices, Andrew.
Yes, another big month, June. We shouldn't be surprised, Michael. We've had very strong clearance rates over June, particularly in Sydney and Melbourne. Sydney, of course, had two clearance rates over 80%, weekend clearance rates over 80%, which we notionally regard as boom time results. Of course, the market's still below in terms of prices where it was a year ago, but a very strong June, which is the end of the autumn selling season, of course, the notional autumn selling season. Melbourne also had strong clearance rates, and really the auction markets were strong across the board. Even the Canberra market, which has been a laggard, picked up over June. So no surprise, we've seen strong monthly growth in house prices. This is the quarterly result compared to the May quarter result. Sydney up 2% over the month, very strong. Canberra up 3%. And when we look over the year so far, Sydney house prices have increased by 6.8%, and that's at the halfway mark of the year. So certainly on track to get a double figure result, that Sydney market. Compared to the June quarter last year, Sydney prices are just down by 1.5%. And that gap is now, on the annual price change, is now certainly narrowing, Michael. And every capital city recorded increases in house prices over the June quarter compared to the previous May quarter. And of course, that's for the national house price. That's the 5th consecutive quarter of house prices. So this isn't a one-off sort of result, dead cat bounce, whatever you want to call it. It's a consistent revival in our housing markets. Of course, markets are moving into pause mode now, midwinter, but are certainly set for a rebound in spring. And unit markets have produced the same results, Michael, very similar results of a revival since the beginning of the year. Prices were up everywhere for units except Canberra and Darwin. Again, we've seen an across-the-board revival in house prices.
I just wanted to interrupt this week's Property Insider chat to remind you this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat with you to help you take advantage of the new property cycle. If you think about it, an opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and your options? Remember, we've got no properties for sale, but we offer strategic advice to give you directions, results, and certainty. This is the right time to get all your ducks in a row and get set for the opportunities that are going to abound. But be careful. Property investment is a process. It's not an event. So you can't just go off and buy any property and hope to be successful. Formulating a plan and getting the right advice is more critical than ever now. So why not have a chat with the team at Metropole? Go to metropole.com.au. Well, it's school holiday time around Australia. It's also winter time when a lot of people decide it's not the right time to move house. That means there were fewer properties up for auction. Clearly, that had to impact the results this weekend, Andrew.
Yeah, absolutely, Michael. And of course, we have previewed this would happen, and it happens every year. And we've had a very strong autumn. The house price results reflect that. Clearance rates have been their highest for a number of years in most capitals. And now we're at school holidays. Every capital city is now in school holidays. New South Wales and South Australia started school holidays this weekend or last weekend and this week. And of course, that's a significant distraction for buyers and sellers, and a lot of activity has been absorbed through autumn. A lot of pent-up demand has been absorbed, and as we usually see, the focus now becomes on the end of the year market through spring, those wanting to finalise a purchase or a sale by the end of the year. And that's why we see that revival through spring, because a lot of those decisions are being made now in terms of changing residence before the end of the year. No great shock here, Michael, to be quite honest. The weekend results, very small numbers of auctions, just 363 auctions in Sydney, 347 in Melbourne, which for Melbourne particularly was a very sharp decline compared to the previous weekend when there were 511 auctions. Melbourne still had quite a healthy clearance rate, Michael, of 69%, but Sydney well down at 62.5%. Certainly, well below its 80% plus results of a month ago. But again, small numbers. And we do see, in particularly Sydney and Melbourne, a lack of mid to higher price properties at this time of the year. So it can have a price effect because you have a much higher proportion of lower priced properties, which tend to reflect to some degree non-discretionary sellers in the market. So a fairly traditional winter market coming up. In all likelihood, we'll see the spring revival reinvigorating the market as usual. Brisbane also, although its numbers were similar to the previous weekend and still, quite low numbers, clearance rate was down following that 70% result the previous weekend. Adelaide also down from its traditional 80% plus result, and just a handful of auctions in Canberra. And as with the other capitals, Michael, clearance rate was down. When we look at the monthly results, you can see that now with the July result falling away in Sydney, Melbourne, still above where it was a year ago. Brisbane similar to a year ago. Same for Adelaide, and Canberra just a little bit lower, but from very low auction numbers. So really no surprise there, Michael. You really can't read much into that when you're only getting a handful of transactions. And of course, part of that is, as I mentioned, a reflection of the fact that we had such a strong autumn selling season, and this is the time for reflection and pause until we get our typical revival starting to come through in August.
Well, you said one can't read much into it, but on social media, people are already saying, see, told you it couldn't last. So we'll be back again next week reporting exactly what's happening in our housing markets. Thanks for your time today, Andrew.
Yeah, thanks, Michael. I look forward to more of the foot and mouth disease across the board.